Hello everyone, welcome back to our channel. This video is going to be about CA Final, Self-Paced Foreign Modules, Set A, Corporate and Economic Laws. In that too, Company Law, we are going to see about the Directors chapter. And whatever the notes I'm using here on the screen, it will be available in the website. The link for the website will be there in the description and in the pinned comment. You can log into the website and download the notes for free. Now I will tell you how to use the website to download the notes. Now here in the browser you can type Mission CA Virtuals and then you can see the first page which is opened and here you can click on it. Now here if you see, you will see this tab CA Final SPOM free resources. When you go into that, you will be able to find all the SPOM resources. Set A, Set B, Set C, Set D, everything will be there. Instead of scrolling through Telegram channel, word messages and all, you can just come here and then find these resources. Just you have to log in into the website, then you can access the resources for free. So all the YouTube channel links, YouTube videos links, and then the resources PDF, everything will be uploaded here. Inside the Set A folder, it will be available. So you can easily come into this website, log in with your mobile number, and then view the PDF resources. So now we can start the chapter. Now we can see the overview of the topics in chapter number 2, Appointment and Remuneration of Managerial Personnel. Now we can start the chapter. Here the first thing we are going to see is section number 196, which talks about the appointment of MD, Managing Director, WTD, Whole-Time Director and Manager. Here for appointing these people, every company has the right to appoint these people. MD, WTD, Manager we can appoint. But one thing is, we cannot appoint MD and Managing Director at the same time. MD and manager at the same time. Managing director and manager we cannot appoint at the same time. The next thing is tenure. We cannot appoint them for a term exceeding 5 years at a time. At a time we can appoint for a term only maximum 5 years. Reappointment we can do, that we have to do 1 year before the expiry of the term. That is during the last year of term we have to do the reappointment 1 year before the expiry. This you have to highlight, and then important points you have to highlight. Then this noting also you have to do of the important points. Next thing is eligibility for appointment. First point, he should not be disqualified under section 164. Second point, he can be within the age group of 21 to 70. Minimum 21, maximum 70. If you want to appoint a person who is aged more than 70, you have to pass a special resolution. If you are unable to pass a special resolution, you can get the majority approval and then the central government approval. Majority votes in favor plus central government approval will also work if you want to appoint a person who is aged more than 70 years. Next point is, you cannot appoint a currently insolvent person or a person who has been insolvent in the past. Any person who has suspended the payment or made a composition or arrangement with the creditors, that person also you cannot appoint. If a person is convicted by a court for an offence, sentenced to more than 6 months period imprisonment, then that person also you cannot appoint. For example, if a person is sentenced for a period of 10 months, you cannot appoint him as a MD/WTD manager. Schedule 5 additional conditions also we are going to see. If you are getting imprisoned or you are getting a fine more than 1000 under some 19 acts, we have a list of 19 acts here that is mentioned here. Like, this is the 19 acts, most important acts. This list you don't have to remember, but this you have to see that 19 acts list we are having. If you are getting imprisoned under those 19 acts or you are getting a fine more than 1000 under those 19 acts, you are not eligible to be appointed as a MD/WTD manager. If you are detained for any period under the Coffee Posa Act, Conservation of Foreign Exchange related, and then Smuggling Activities related Act, if you are detained under that act, then also you are not eligible. Another exception is that if you are not eligible under these 2 points, but you want to get appointed as MD/WTD manager, you have to get the approval of the central government. First, you are not eligible and you are getting the central government approval and you are getting appointed. After getting appointed, again you are getting you are attracting any non-eligibility under these 2 things. Again you are getting caught under this act. Again you are getting sentenced to imprisonment under the 19 Act. Then again, if you want to appoint, you have to get the central government approval another time. When you are getting the central government approval, it will be valid till the time you are not getting any further ineligibility under these 2 conditions. So it will work that way. The 21 to 70 years condition is also here. 70 years plus special resolution, that condition is also here. And then fourth condition is, he should be a resident of India. What is the meaning of resident? Here they are saying, from the date of appointment, previous 12 months, you should be staying in India, or else you should be coming to India for employment or business or vocation. This resident condition will not apply to special economic zone companies. If you are a non-resident, they have given another point, you should get a proper employment visa before coming to India. Only then you can come to India. A procedure for appointment, you have to get the board resolution. You have to get the approval of the board by board resolution and approval of shareholders by a resolution in the general meeting. Then, if you are not following the conditions under Schedule 5, then you have to get the central government approval also. They have given within how much days you have to file the form, within what form you have to file to file to the central government, that they have given here. Then, when you are conducting the general meeting to get the approval for appointing MD/WTD manager, certain things should be there in the notice for the general meeting that they have given. You have to file a return also after appointing MD/WTD manager. Such related information is also given here. If a person is getting appointed with the board approval, and then he is starting to work, and then you are getting the shareholder approval in the next general meeting. Within this period of time, the person would have signed many contracts, executed many things for the company in the position of MDWTD manager. Whether those things will be valid or not, that is the question. That will be valid, and that is given here. Next thing is, one thing you need to understand, this board approval you will get, and you will get appointed, and then in the next general meeting you will get approved by the shareholders. In that between, you will get a time. In that time, if you are doing any act also, it will be valid. They have given some exemption which you can read it by yourself. So the next thing is section number 203, appointment of key managerial personnel, KMP. Key managerial personnel, what is the meaning of that? We have three things. One is the MD, CEO, manager. You have to appoint them. If you are not having any of them, you can appoint a whole-time director in their absence. Company secretary, you have to compulsorily appoint. CFO is also mandatory. You have to appoint these two persons mandatorily, and then you have to appoint MD, CEO, or manager. In the absence of these three, you can appoint whole-time director. These will be the whole-time key managerial person of the company. This mandatory appointment is for who? You have to appoint these persons mandatorily if you are a listed company. Otherwise, if you are a public company, if you are having paid up share capital 10 crore or more, paid up share capital which includes equity plus preference 10 crore or more, you have to mandatorily appoint these whole time key managerial personnel. But if you are a private company, your paid up share capital is 10 crore or more, then also you have to appoint company secretary alone mandatorily. For other public companies, listed company, everything you have to appoint. Other public companies, you have to appoint if the threshold limit is breached. If you are a private company and your limit is breached, but you have to appoint only company secretary. If your limit is breached as a private company, only company secretary is mandatory. Remaining you can appoint based on your choice. Next, managing director or CEO. If a person is CEO or managing director, he cannot be again appointed as the chairperson of the company. Why? Because chairperson will do all the work related to the board meeting, and the related responsibilities will be handled by the chairperson. CEO or managing director, they are the executive persons in the company. They will do all the work in the company, and then these persons will be doing the implementation of the normal business they will be doing. But if you are giving all these responsibilities to a single person, he cannot handle it. So that is the reason we are not giving the chairperson position to the MD or CEO of the company. But you can do this if your articles of association provide otherwise. Your articles is saying that you can appoint it, then you can appoint. And if you are having only single business, then also you can appoint the same person for these two roles. He will be able to manage the workload. Next, if you are having multiple business plus you are appointing separate CEO for each of the business, then in that case also you can have chairperson plus MD or CEO as the same person. So this is another thing, and such other companies also can do that. MCA has clarified that if your turnover is 1,000 crore or more, and then you are having multiple business, you have appointed a chief executive officer for such each business, and then you can take eligibility, you can take advantage of that proviso, and then you can appoint MD or CEO as the chairperson of the company. Another thing, paid up share capital 100 crore or more, that thing also, that kind of company, paid up share capital 100 crore or more, and then annual turnover 1,000 crore or more, that kind of companies can take use of this option. Condition for appointment, you have to take a board resolution. In that board resolution, terms and condition of appointment should be there. You cannot have more than one company. You cannot be a KMP in more than one company, except in a subsidiary company. Normally, only in one company you can be a KMP, because the name itself is whole time KMP. The entire time of your work you have to devote to only one company. But you can be we have an exemption. You can be in a holding company as well as subsidiary company. Even though it is two companies, you can be in the board of those two companies as a whole time key managerial personnel. This is a transition provision, you can read by yourself. Next thing is, if you are MD or manager in more than one company, whether you can be that or not. Normally, key managerial personnel cannot be in more than one company except subsidiary company. But a person is already MD or manager in one company. Now you want to appoint such person as MD or manager in your company also. Now can you do that? We have a mode of operation that we are going to see. You need a board resolution for appointing such a person who's MD or manager in only one company. You need a unanimous board resolution. All the directors who are present at the meeting, they should approve the resolution, and then the notice should be given to all the directors present in India. These are the conditions you have to follow if you want to appoint a person who is a managing director or manager in one company. You have to appoint him in your company also. Then you have to follow this procedure. Then filling of vacancy of KMP. If there is any vacancy in KMP position, you have to fill it up by the board meeting itself. You have to fill it up by the board within 6 months from the date of vacancy. Penalty also they have given. Some exemption also they have given. You can read it by yourself. Next, we can see the overall maximum managerial remuneration that we are allowing to be paid to the managers in a company. In a company, we will be appointing KMP, MD, WTD manager, everyone we will be appointing. To them, how much we can pay the remuneration. To all the directors, how much we can pay the remuneration, that maximum limit that is given in section number 197. This is applicable to a public company, and they have also given provisions what we have to do if we are having no profit or profit is not even sufficient to pay the amount for the directors. This section does not apply to a private company. This is the most important point. And then the limit will be specified in this section. For example, the total remuneration you can give to the director is 11% of the net profit. This net profit, how you have to calculate, that is given in section number 198, which we will be seeing later. Overall limit is 11% to the entire directors. All the directors, only 11% is the maximum remuneration. The next thing is for MDWTD manager, how much you can give. If you are having only one MDWTD or manager, 5% of the net profit you can give it to him. But you are having more than one MDWTD manager, then for the entire MD, WTE manager combined, you can give total 10% of the net profit. If you are having managing director or whole-time director, then in that case, for the remaining non-executive directors, you can give maximum 1% of the net profit as the remuneration. And then, if you are not having any MDWTD, no managing or whole-time director is there, in that case, for the remaining non-executive director, you can give maximum 3% of profit as the remuneration. If you want to pay more than this limit, you have to pass a special resolution in the general meeting. If you are making any default, you obtained a loan from financial institution or secured credit or non-convertible debenture and you made some default, then you have to obtain the approval of such financial institution also before paying any remuneration to the director. If you are paying any remuneration, it will be excluding the fitting fees. You can pay this percentage remuneration also. Extra, you can also pay fitting fees to the director as per section 197(5). And then no profits. When you are not having any profit in the company, then you can pay remuneration in accordance with Schedule 5. In Schedule 5, they have given two cases, limits under Section A and then limits under Section B. We have two limits. You can select under which section you are going to pay remuneration to your director when you are not having any profit. When you are not having any profit, the remuneration will be paid based on the effective capital. Effective capital is the money being managed by the directors. So if the effective capital is negative or less than 5 crore, we will be paying 60 lakh to the managerial remuneration. Managerial remuneration means this 60 lakh we can pay only to the MD, WTD manager. For the remaining directors, we can pay maximum 12 lakhs. In the case of effective capital, negative or less than 5 crore, to MD, WTD manager, 60 lakhs. Remaining 12 lakhs. Same like that, we have other limits also. We can write this thing in the form of a slab limit here. If you are quickly turning the pages during IBS and you need to find out the amount of remuneration which you can pay. If you are writing this in this simple manner here, it will help you to find out the limit quickly and then you will be able to locate the answer quickly in this thing. So you have to highlight this amount and then you have to write this sentence format by converting it to slab rate format here and then you can write it here. It will be very helpful for you in IBS. You have to write it here. If you want to make payment within this limit, you have to pass ordinary resolution. If you want to make payment more than this, you have to pass the special resolution. Next thing is, they have given some other information relating to that, like on which date you have to see the effective capital. For a newly incorporated company, what you have to do. If the time period is less than 1 year, what you have to do. That is given there. If you want to pay under section B, you have to pass a special resolution and then other condition also you have to satisfy. What are the condition? The director should be functioning in a professional capacity. He should not having any interest in the company, subsidiary or holding. No interest means no interest in the share capital. He should not be holding any shares. For this, we are having some exemption. If the director is getting a remuneration, is getting the shares from the company, from any employee stock option plan or some kind of scheme, and that share is not exceeding 0.5% of the paid up share capital, then in that case, we can consider that person also for paying limit under section B. Normally, if you want to pay under section B, that director should not have any shares in his name, but he can have if such kind of share is satisfying these conditions. He may hold such share and also get paid under section B. He should not be related to the director or promoter. He should not have any interest also in these people. He should have minimum graduate level qualification and specialized knowledge should be there. So these conditions should be satisfied and then you can pass a special resolution and make payment under section B. What are the additional conditions you have to follow? The payment should be approved by the board resolution, and in case of your company, if you are having a nomination and remuneration committee, such committee should also approve the remuneration. You have not done any default to the such public financial institution. If you have made any default, you have obtained the approval of them also, and then ordinary or special resolution you have passed. So, if you are selecting section A, within the limit, ordinary resolution. More than the limit, special resolution. You have passed such resolution. When you are trying to make payment under section B, you have passed the special resolution. That you should do. And then, when you are calling a general meeting for paying the remuneration to the director, in that general meeting notice, you have to give some explanatory notice. You have to include these information in such notice. Such information list also is given here. And then remuneration, how much we have to actually pay, that will be decided by the articles of the company or resolution by the shareholders in the general meeting. Or if the articles of association is saying, you may have to pass a special resolution also. If for determining how much remuneration we have to pay, the remuneration you are paying, it will be the final amount for all the services rendered. We cannot say you are paying 10 lakh for director capacity and then 20 lakh for other capacity, like that we cannot say. But we can pay in other capacity if the following conditions are satisfied. Normally, whatever the amount you are paying, it will be considered as director remuneration only. But you can pay more than director remuneration. You can pay extra amount also in the name of other capacity if the following conditions are satisfied. The service fee is providing is of a professional nature. In the opinion of nomination remuneration committee, he is having required qualification. Then in such case, over and above the director remuneration, you can pay remuneration in other capacity also. For the services rendered by the director in other capacity also, you can pay extra remuneration. So for that, they have given an example here. And then section 19275, we have sitting fees to directors. We can provide fees for the directors for attending the board meetings. That fees shall not exceed 1 lakh rupees per meeting. And then when you are paying sitting fees, you have to pay the same level of fees to the all the directors, including independent and women director. You cannot discriminate against these people and pay less amount of fees for the independent and women director. And then the percentage you are having, right, 11% of net profit and 10% of net profit, that will be exclusive of the sitting fees. Sitting fees will be calculated separately, not included in that percentage. For that, they have given an example also. Next, mode of payment. You can make payment by way of a monthly payment or as a percentage of net profit, or you can use a combination of both. If any director is taking excess remuneration from the company more than the limit, he has to refund it within 2 years or such lesser period allowed by the company. 2 years or lesser period allowed by the company. And one more thing is that such company cannot waive off such loan. They cannot waive off such refund amount. They cannot say that we can waive off this loan and the director need to pay. That we cannot say. We cannot waive it, but we can waive it provided we are passing a special resolution within 2 years from the date of refund liability. Compulsorily, the director has to refund the amount. The company can waive off if we are passing a special resolution within 2 years from the date of refund liability. If you have made any default from the financial institution, you have to obtain the prior approval of the financial institution before waiving of the refund amount from the director. So we have to give some disclosure in the board report for a listed company related to some information like ratio of director salary to the ratio of median employee salary. Such ratio we have to give. We have to give a lot of disclosure relating to the employee's salary and then the director's salary. We have to compare it and give some disclosure in the board of director report. This also you can read here. And this thing is important. You have to give special attention to here and then read it. This important point you have to highlight and then you have to note the separate point also here. So that's all about the disclosure in the board report for a listed company. This is only for a listed company. That is also important point. The next point we are going to see is related to the indemnification insurance which is taken by the company in respect of MD, WTD, manager, CEO, CFO or CS. If any loss occurs to the company because of any mistake or negligence or default of any of these people, the insurance company will pay money to the company. In this kind of contract, the insurance premium paid, whether it will be added to the remuneration of the directors. That is the question here. If the director or such person, officer is proved to be guilty, then such insurance will be added to the remuneration. But in other cases, it will not be added to the remuneration. So this is the simple point that you need to understand, and you have to highlight these points also, which I have highlighted here. Next thing is remuneration payable from holding or subsidiary company. The director may get some commission or some other thing from holding or subsidiary company also, and he shall not be disqualified for getting such commission. This you should disclose it in the board report. That is one more disclosure point. The next thing is penalty they have given, and then auditor report under section 143 we have a checklist. They will call it as 143 checklist, and then in that certain things the auditor should check and give a report on. That also will be given, and in that report this remuneration is paid according to the Companies Act only. That kind of checking and that declaration should be there. The auditor should make a statement regarding that. Details regarding the statement they have given here. And then some exemptions also they have given here relating to certain companies for this section. This also you can read it by yourself. And next thing is recovery of remuneration in certain cases. For example, you are supposed to restate your financial statements. When we will restate our financial statements? When there is any fraud or we are not preparing the financial statements by complying with the accounting standards or the Companies Act. In that case, we will reopen our financial statement and then reopen it and make it again. We will correct the financial statements. Due to such restatement, if we are requiring to demand excess remuneration from the director as refund, then the director should refund that excess remuneration. The simple point is, if a director is required to refund some excess remuneration because of restating the financial statement, he will be liable to refund such amount. Next, section 198, we already saw that we will see how to calculate the profits. Here we have three categories. First category is that what are the credit. For that we should not give the credit for the profit. These are some of the profit. We should not include it in the income or the net profit we are going to find for director remuneration. These are all profit, but we should not include it. Like we can take it as negative list. These profits should not include here. Like premium on share debenture, forfeited share you are forfeiting, and that on that you are getting some profit, some capital nature profit, like sale of undertaking, substantial part of business you are selling, and out of that you are getting a profit. And then sale of immovable property, fixed asset, that you will not get. And then if you are getting any revaluation gain, notional gain, unrealized gain, all that will not be included in the net profit for director remuneration. Then they have also given a point relating to the sale of fixed assets, from where you can get a credit of some amount. For example, you are making a fixed asset sale. The fixed asset was at original cost, and then it was reduced over the time due to depreciation, and now it is at WTV. Now you sold it at an amount. That amount is more than the WTV, so you sold it at a profit. That profit you can treat it as a recovery of depreciation, and you can take the credit. That is one more point. You can take the credit of such amount. You can add it to the net profit. But in another situation, you are purchasing it at original cost, and then it is going down by depreciation, and then now you are having it at WDV. But when you are selling the asset, you are selling at more than original cost. This amount you are selling. This much amount you are getting profit. In this entire amount, WDV to original cost, this you can take the credit. You can add this to the net profit. But this amount you cannot add it to the net profit. So that is one more point that they have given in detail here that you can read. That's all about the profits that should be included in the net profits. Next is that some normal expenses or losses that we can incur, and we can also deduct it from the net profit in section 198. Usual working charges, director remuneration, bonus for the company staff, any tax on abnormal profits, or tax on business profit under special situation, interest on debenture, interest on secured loan and mortgage, interest on unsecured loan, repairs which are not capital nature, revenue expenditure repairs, contribution to political things and charitable funds, contribution to charitable funds under section 181, and then depreciation as per section 123, and then excess of expenditure or income. Previous year losses, you can understand it like that. Next thing is compensation or damages due to breach of contract that you paid compulsorily, and then bad debts. Those things you can normally reduce from the net profits. These are allowable expenses. Next, third category is that we have some expenses which are not allowed. This is the third category. Normal income tax and some super tax also payable by the company under Income Tax Act. That you should not consider under the net profit. You should not reduce it. Now the next thing is any compensation or damages which is paid voluntarily, that also you should not take. And then loss of capital nature, profit of capital nature also you should not consider. Loss of capital nature also you should not deduct. And then change in carrying amount, some revaluation loss, that also you should not consider for calculating the net profit under section 198. This is the overview of section 198 profit. And then next thing is section number 202, compensation for loss of office. When you are firing some person, some director or MD, WTD manager, you have to give some compensation to them. Relating to that, this section is there. In some cases, you will not be giving the compensation. Where when your company is doing some reconstruction with another company, like some merger or amalgamation, and in the other company, the new company, the director is getting a place and he is getting an offer for a job. He has accepted that offer, and there he is getting placed and he will continue to work there. In that case, we will not give any compensation. He is resigning on his own. Then also we will not give any compensation. If office gets vacated, the company is getting wound up because of the negligence of the director. And if the director is guilty of fraud, gross negligence and gross mismanagement, that is the mistake of the director, we will not give any extra compensation. And then he himself induced the resignation, he himself induced the firing of himself, so that he can get the compensation. Then in that case also we will not pay any compensation to him. In other cases we will pay the compensation. These are some prohibited cases where paying the compensation is not allowed. So compensation we will pay when the company itself is removing no fault of the director, when he is normally going to retirement, and he is going out of the company because of reconstruction, and he is not appointed in the reconstructed company. Any other case which is not falling under this specified prohibition. So in those cases compensation will be paid. And the next thing is how much we will pay the compensation, for how much period we will pay. Maximum only 3 years is allowed. When we are removing the director, how much is the remaining term? For example, remaining he has 2 years of contract, and the maximum is 3 years only. Now we will pay for 2 years, but remaining we made a contract with him, and he will be working for a total of 4 years remaining. But the maximum is 3 years only. Now we will pay 3 years only. Like that, we are having a time period limit for paying the maximum remuneration. How much amount we will pay? That will be the average remuneration for the past 3 years. Whatever the remuneration he earned in the past 3 years for lesser period, then that average remuneration we will pay to him for the next period also, for which we are removing him. If the company is being wound up, we are winding up the company either before the date of cessation of office of such director. The director is going away, and before that itself, the company went in winding up. Then we will not pay any compensation. Or after the director went away, after that within 12 months we are getting to wind up the company. In that case also, we will not pay any compensation. And this does not prohibit if we are paying any other amount in any other capacity to the director. That is separate. This is for compensation for loss of office. Even if the director is not eligible for this compensation, we can pay some amount in any other capacity services. So that is allowed. Next point is secretarial audit for bigger companies. For some bigger companies, we need to compulsorily do the secretarial audit using a company secretary in practice. Every listed company and every public company, other public company which is every other public company which is exceeding the limits, paid up share capital 50 crore or more, turnover 250 crore or more, loans 100 crore or more. If you are exceeding this limit, you have to appoint a company secretary in practice and conduct the secretarial audit. Relating to that, other information also they have given what form you have to do. You have to attach it with the board report. The company secretary will be given all the assistance, and then some qualification or observation given by the secretarial auditor. For that also we have to give explanation in the board report like that. Then penalty they have given. Some example also they have given relating to the threshold limit. When you are breaching that, you have to compulsorily do the audit. That also you can read it by yourself. That's all about the overview for secretarial audit section. Now we can see section number 205, which is about the functions of company secretary. So what are all the duties, functions, work of the company secretary? They have to report to the board of directors about the Companies Act. What are all the requirements under Companies Act, whether they are following it for particular events like appointment of director, resignation of director, independent director, whether the provisions they are following it properly, all the provisions of the Companies Act. They have to follow the secretarial standards which are applicable, and then they have to provide guidance to the company board of directors. What are the duties of the board? What are the responsibilities of the board? What are all the powers of the board of directors? This should be guided by the company secretary to the directors, because company secretary knows more about the Companies Act. The directors, they may not know about the Companies Act at all. They may be experts in production, manufacturing, marketing, logistics. They should know about the Companies Act. That should be guided by the company secretary. They have to facilitate the meetings. They have to help the chairperson of the board to conduct the board meetings, and then they have to maintain the minutes of the meetings. They have to get the approvals which are necessary from central government or regional director or tribunal. Wherever the approval is needed, they have to help in obtaining those approvals as per the Companies Act provisions. They have to represent before various regulators about the complaints of the company, legal complaints. The company secretary has to represent the company, has to talk for the company, has to speak for the company with various regulators like RBI, SEBI, IRDA, etc. And then they have to help the board of directors in conducting the affairs of the company. They have to advise the board in ensuring good corporate governance. They have to ensure that the company is run in a fair and proper manner. They have to do the other duties as may be specified by the board of directors and in the Companies Act that they have to do. Then here we are having these items under the functions of the company secretary, but this does not reduce the obligation of company chairperson, managing director, or whole-time director. They are also having the equal responsibility. Just because the function is given under this section for the company secretary, they cannot say that I am not responsible. Only the company secretary is responsible. Like that, they cannot say. MD, whole-time director, they are also are responsible for the functions of the companies. The next one is section number 200, where the company can fix the limit with regard to the remuneration. For the directors, employees, the company can fix the limit. Now, the limit, the overall ceiling, the statutory ceiling will be here. The company cannot override the statutory ceiling. This is the statutory ceiling, but they can fix a lower amount. For example, company is saying 10%. The statutory ceiling. The Companies Act is saying 10%. The company can fix a lower limit, like 8% or 6%. Like this, the company can fix a limit lower than the statutory limit. That can be done by the company. And when doing that, they will keep into mind the financial position of the company, the remuneration drawn in any other capacity. The same person, he is a director, for that he is earning 10 lakh rupees from the company. And he is also a consultant. And he is also an engineer. Like that, he is holding various positions in the company. He is a consulting engineer and he is the other particular position. Like here, he's occupying three or more positions in the company, and he's getting 20 lakh for the other positions. Like that, that also should be considered before fixing the limit to the remuneration. Then, remuneration drawn from any other company. What is the remuneration they are getting from the other companies? Qualification of the person, experience of the person, any other matter. What all the other matter? financial performance of the company, operating performance of the company, how the company is performing, relationship between remuneration and performance. If you give more remuneration, whether they will perform well or not. If you are reducing the remuneration, whether there is an effect on the performance. Everything they should check before fixing the limit. Proportionality of remuneration and a rating methodology should be used. So, for directors, how much remuneration you are giving. For other employees, how much remuneration you are giving. That proportion they should maintain. And remuneration policy, why they are making a different policy, why for director different policy and other employees different policy, the explanation for the difference. And then securities held by the directors including the options, that also they should keep into mind. What are all the shares held by the directors including options, and whether they have pledged those shares somewhere else, that also we have to keep it into mind when the company is fixing the limit for the remuneration for directors and other employees. The next section we are going to see is section number 201, where we have to file some forms, do some application to get certain things done. If you want to appoint a person as a managing director who has attained 70 years of age, the main requirement is you have to get the special resolution. If you are not able to get the special resolution, but majority vote in favor, and you are getting the central government approval, you can appoint the person 70 years of age also as a managing director. For getting this central government approval, you have to make an application. For that application, what is the process? That only we are going to see here. The company should file the application to the central government within 90 days from the appointment. Appoint that person as the managing director. Take 90 days. Within that, submit the application to the central government. Then before filing the application, you have to do one thing. Give a general notice to all the members. Give a notice that, like that, we are going to appoint this managing director, and this managing director, we need the approval of the central government. For that, we are going to send the application. That you have to give us a general notice to the members, shareholders. Such notice, you should also publish it in the newspaper. And when you're making the application, this notice you have to give it before the application. When making the application, this notice copy also attach along with the application. That's all. You have to publish the notice in the newspaper. What newspaper? You have to publish it in the principal language newspaper in the district of the registered office of the company. The company will be in a state. In that state, it will be in a particular district. In that district, whatever the newspaper, whatever the language that is spoken, mainly that principal language, you have to find a newspaper and publish the notice one time in the newspaper. After that, in an English newspaper which is circulating in that district, you have to choose that newspaper and give a publication, give a publishment once, at least once in English you have to publish it. Then you have to attach the notice along with the application, that also we saw. That's all about this section number 201. Now we have completed the entire directors chapter. Now, after doing this, if you learned from this video, if you have understood this video, please like this video, share this to your friends and subscribe to the YouTube channel. Your friends also will get benefit from this video, and the notes which I am using here, it will be there in the website. You can download it from there. All the best for your exams.